Welcome to Trading Lounge and the US Indices. We'll look at the S&P and probably Amazon as well because it's leading to the upside. So we were looking for a correction to pull back into this box here, and it didn't pull back down that far. It didn't come in through the 2800 area here. So we need to look at this as the A wave, the B wave and the C wave here. It is possible that this can get a little bit uglier here, and I'll just draw it out here now because we won't be able to do it on the tick chart. There'll be one more little move up into here, and then we could have this as a 5-wave sequence to the downside here and then up from that point there, which then would leave this here. If I can just copy that and put that here and this here, and then this would be a B wave here, and then in this case this would be the A wave to here, an A and a B and a C wave here for the B wave, and the C wave down through to here. So that's a possibility. So what we do need to do is that the move from this low here, let's just say to the 2865 area here, then the 50-60% retracement level here would be in this space here. So as long as the market stays above the 2830, then we'll be looking to move higher from that point. Okay, so we'll come back and investigate this in a moment, but the bigger picture here with wave 1 and wave 2 here looks like this here. So from the Christmas low here, then we're counting up as 1 and 2 here, 1 and 2, and then 1, 2, 3, 4, and 5 for the third wave, the fourth wave, and then 1 and 2 here, and then looking up for, let's just bring this back in over here, then 3, 4, and 5 here for the third wave, an A and a B and a C for the fourth here, and then one up for the fifth wave to finish that sequence. And then that's the end of the run at that point there. Okay, so I know a lot of other people have got this particular top here sitting over on this one here as the sort of final top, but we didn't see it like that. So yeah. And we also got the turn down here as well. We basically went long on this point here, so yeah, I think we did reasonably well. And I think one of the points about that is that I try not to assume too many things. I try to look at what counts are possible and label them, and then just go through them. And before we trade or before we call something in, we wait for the evidence to come in. And one of the good things about this here too is that with the trading levels, we're always looking for support and resistance. And you know, I think that a lot of the successful trading systems that are out there are pretty much based off support and resistance when you break them down and have a look at them. And one of the things in this thing here is that we've got a nice resistance here, and now we've checked it back as the support here and then made a new high. So because it's made a new high, that means that it's been tested here and then can continue to leave that point there. This is a variation on the classic trading levels pattern, and I think we should just go over that for a bit because we did mention it last time as well. So let me just bring back in, there's only 3 patterns that really occur at the levels, and this one here, because I think we mentioned in the last videos, oops, not this one, that's the overshoot pattern, don't need that one, this is the one that we want. So in this case here we have the arrival, say at the 2800, the reaction, the first high above the level, and I thought that we may be getting something like this here, coming back below the level here and then moving up, and then that would be our entry here. But we didn't get that one. We got the variation on that, which is this one here where it's got the arrival, the reaction, comes back and sits on the level and then moves up from there. So there's really just, they're the patterns. This is the second most common pattern, and the third one is this one here where it doesn't stop at the level, just goes straight through it, comes back down and then finds support here and then moves off. And using this level here, this price point here, as as the sort of central theme, or the balance line as I like to call it. So they're really just the three patterns, and it's just a matter of working out which one is which. I mean, they're handy because then you don't really need to to understand Elliott that way much to trade. So so just going back into the hourly chart here for a moment and looking at this little move to the upside here. I also need to mention too that the Nasdaq and the DJ have got all this kind of they're all a little bit different actually. So they're not sort of following each other. That they are and they're not. They're just different patterns. So if I go to the tick chart here, I need to bring in a bit more data here. So yeah, it looks a bit like this here. One of the reasons that I thought that, I mean, let's just look at this trend here for a moment, okay? So with this trend here is that from this little low here, I can count 1 and 2 and 3 and 4 and 5 to here. So we've got 5 waves to this point, and then if you've got a keen eye, you can see we've got 5 to this point here. So 1, 2, 3, 4, 5. And here we've got 1 and 2 and 3 here, ABC for 4 and going up for 5 here. One of the problems with this is that I can draw on this side of the tick chart, but not on this side. The length of this here, just grab that there. It's only a subtle point, but it's worth noting. And over here, you can see that this one here is longer. Okay, so we either have, let's just grab this one here and copy that and put that here. For this one to be a third, because this one's longer and this one's here short, if we go 1 and 2 and 3 here and 4 and 5 here, if we did that, then we know that this wave 3 is shorter than wave 1 here. So that means that wave 5 needs to be shorter than wave 3 here. So I don't think it's going to be the case because we've still got 1, 2, 3 here and ABC here. So we're still going to push up into the 2865, which we are getting to. From the 2800 here, which is a minor trading level 8, then we have up to the 2900, we have the sub levels. So we've got the Fibonacci numbers as price as 1, 2, and 3, and then 5. And then we go to 8. But with 8, we also pop in 72 and 65. Yeah, anyway, so that would be the resistance for this. But it doesn't count very well here as a sort of a wave C or even a wave 1 here. So it's probably more likely that we have this as 1 here and 2 here, and 3 would be up here somewhere. So we could look at this. Whoops, daisy, got to take it off large caps. And 3 here. And then this becomes, from wave 2 here, this becomes wave 1 and 2 and 3 and 4 and 5 here for that market, for this moving up here higher through here. So if you see this, what we could say here is we could say that if this market was going to fail, it's going to fail from in between 65 and 72 here, or 70, 72 in here. But if 72 here, the 2872 becomes support, then you know that you're on your way, and you'll be moving up much higher then, and then this wave structure will extend out further. When I look at the cash market, when we look at this in terms of the cash, this little ABC here in the cash market, we don't make a new low here, and that's why I was thinking that wave B could be up here. It's still possible, but I mean it's possible. It's possible when I look at this. This is the cash market here, so we didn't make a new low on this one here. So it's possible that all this could be the A wave here, and then an A and a B and a C wave up here for the B wave, and then come down for the C wave here. So that's quite possible. We can't sort of throw it out. But when I look at this, here, I can count 5 waves here. So if you're with me here, we'll go 1 here and back for 2 here, and then we can go 1 and 2 and 3 and 4 and 5 here for the third wave. So the third wave's all here, the fourth wave here, and a 1 and 2 and 3 and 4 and 5 here. So there's 5 waves here, but this here can also count up here as the B wave here, and there's also 1 and 2 and 3 and 4 and 5 here. So on the futures market, we made a new low here. On this one we didn't, but we could still look at this as an A wave, a B wave, and a C wave here, and then climbing up further. In this case here, it would count up as wave 1 and 2 here, and then if you've got a keen eye, you'll see 1 and 2 and 3 and 4 and 5. So we could look at it at 1 and 2 and 3 here, and in this case wave 3 is longer, and then wave 4 here, and then 1 and 2 and 3 and 4 and 5 to here for wave 1 and 2 here, and be the third wave here. The fourth wave still playing out here. Obviously the market's closed. And then it'll be a fifth wave up into this space. So the 2865 will be a bit of a catalyst for a brick wall there in that space. Okay. So the other thing, if we look at one of the leaders going up, which is Amazon, I was going to put all the stocks in a different video, but I don't know, it's just kind of nice to look at some of the stocks now and again here, so I'll probably keep doing it. So with Amazon here, we've always had this pattern here of wave 3 here with an A and a B and a C for wave 4 here, and then I could count 5 waves up here, and then we worked our way through here as wave 1 and 2. We did go long in here because I thought that we may catch the third wave in here, but we came up and we came back, so we got out. We made a penny or two, but yeah, and then off she goes now. So this movement here is, we're above the 61.8% mark. That's what I'm just showing you here. So this is a 61.8% mark. This little space in here would be important, and also just higher than that as well, just eyeballing that up there. So just using the last leg as a Fibonacci number here. So the 1910 here, the 1910 would be more probable than 1900. The reason for that is because it starts to meet the supply here. But yeah, anyway, there's all the resistance in this little space here. But anyway, that doesn't matter for the time being. What we're more interested in looking at is this little structure moving up through here. I think we've been working on the daily chart for this. So wave 1 and 2 here. I can see we've got wave 1 and 2 here. Just bear with me for a second. I'll just use these here. So we've got 1 and 2 here, and then we've got 1 and 2 and 3 and 4 and 5 to here. That's a bit weird. 1 and 2 and 3. This is not finished. That's still got to go up there. I need to pull that apart on a tick chart and have a look at that. It's still a little bit short. Like this is as a wave 3 here. This looks a bit short. So anyway, we'll see a little bit more upside here, and then we should see this fold back into this space here, and then move up from there. So this pullback here, that's cool, because that will be in line with, if I can just remove that, that will be in line with this making another, I can't draw on this side, making another top in here. So if I just draw it here, moving up into this space here, and then having a corrective move here before going up again there. But we need to make sure that we're actually going up after this too, because I explained that other correction, the B wave here could send us way back down here for this wave 2, but you don't get expanded flats in wave 2s. I mean, I've seen it. It's possible, but I wouldn't expect it in this market on this size of correction here, at least. Alrighty, I'll leave it at that. So, yeah, I guess that if you're trying to get into this market, which would be the next thing, would be either if 72 becomes support, then move in from that point, but expect I mean any pullback. So wherever the high is here, so from here to here, even if I was wrong and there wasn't another push up from that point, then any move back into this space here, you need to allow that to come back down, and then you need to wait for the market to find support on the closest largest number. So if it came to this point here, then it needs to get back up and sit on the 50, for example, you know. So that's what you need to find. If I just go back to the hourly chart here so I can draw on that a little bit. So if this market moves up here as wave, another sort of wave, well, I think it could just continue to climb actually, and if that's the case, we go long on there. Go long on there. If the market gets up to here and pulls back in here, then you need to work with probably the midpoint, because it's had this high at the midpoint here, so it can come up to here, come back. So this will be the balance line here, the 50. So you need to allow it to come back. You need to allow it to find support on this level here, and you'll be looking for something like if the market came down here, back up here, have some sort of correction here, and then move up. You'll be looking for something like that. Okay. Alrighty, thanks for tuning in. Cheers.